Good morning, ladies and gentlemen. It's your boy Tony on the charts, and in this series we're going to break down piece by piece the principles surrounding Elliott Wave and how they can be traded based on some of the principles that we're going to be covering one by one. So to kind of kick off as an overall introduction, this initial video is just going to be covering the concept of motive waves, and as an introduction to that, the kind of principles to Elliott waves are essentially founded in the 1930s by Ralph Nelson Elliott, and it's essentially kind of highlighting the kind of the pattern and the recurring patterns that take place essentially in what originally appeared as a chaotic market. But they were popularized in the 1970s by Robert Prechter, and then that's when they were combined more powerfully with Fibonacci retracements and extensions and the like. So the very, very basic premises is essentially that the market moves in waves. Those waves consist of 5 waves to the upside, and that is described as a motive wave. Now, it should be said that a motive wave doesn't necessarily need to be to the upside, but that's following the overall trend direction. And after these motive waves, you get corrective waves that correct to the short term in the opposite direction. And I guess the interesting thing about this is that the kind of the repeating nature that we're going to get into. And I guess one of the important factors is the numbering and notation that lets us keep track of these cycles. So in this example, we go from 0, 1, 2, 3, 4, and 5 for this motive wave. And as I said, because it's a fractal and repeating nature, this 5-wave motive to the upside in this example can be seen within this, if you look further on a smaller time frame between 0 and 1. So within this stretch, you would still have 0, 1, 2, 3, 4, 5. And then this is what we're referring to. So this example of this 2-wave down and this 4-wave to the downside are the corrections in the opposite direction of the overall trend of this motive wave. So yeah, and we use numbers to be counting the impulses and letters to be counting the corrections. Now, while we have these kind of basic principles of 5 to the upside, 3 to correct, and the fractal and repeating nature from higher time frames to lower time frames, there are some basic premises and rules to be able to kind of quantify a legitimate count, because we're not saying that everything essentially fits into an Elliott wave notation. And the first of those rules is that a wave 2 cannot retrace lower than a wave 1. And we'll look at some live examples using the Fibonacci retracement and extensions tool as to how deep these pull back. I guess we don't need to get into kind of the theory behind Fibonacci's, but these Fibonacci tools are going to allow us to kind of look at where these levels typically pull back, and they're derived from Fibonacci sequences. So typically we can expect a wave 2 to kind of retrace to the 0.618, 0.702 and the 0.786 levels, and rarely, but it does happen on occasion, it goes down to 0.886 or to the 0.5 level. I guess the kind of interesting thing about the wave 3 is this is typically the most impulsive. It's the one that people want to keep an eye out for the most, especially on the higher time frames, on these bigger super cycles, as well as the lower ones like this blue line here. And the only rule with regards to identifying a legitimate motive wave count is that the wave 3 cannot be the shortest. It doesn't always have to be the longest, but we can't have a wave 1 and a wave 5 being longer than the wave 3. Now, in contrast to the retracement of the wave 2, we're going to be talking about extensions. And typical extensions for a wave 3 so that you'd measure against that wave 1 include a 1.618, 2.618, 3.618, 2 and 4.236. And I guess the interesting thing to note is the relationship between the wave 3 and the wave 5. So if you have a really, and I'm sure this makes sense even just from a simple point of view, but if you have a really extended wave 3, then anticipate that the wave 5 actually won't replicate that same kind of velocity and might be quite short-lived. And then finally, with the wave 4, the wave 4 cannot drop below this point, i.e. the wave 1. And then the possible retracements compared to the wave 3 include 0.382, 0.05, can go to, but more rare, it could be really shallow retracements of a 0.14, 0.236, or a 0.618. And then finally, looking at the wave 5, we have possible extensions from the wave 1 to the wave 3 of a 0.618 and 0.786. Again, if we're saying if we've got a super extended wave 3, we can expect a 0.5 or a 0.382. And if we have a shallow wave 3, maybe it's a 1 or a 1.272. So it's just highlighting that inverse relationship. If this is of incredible velocity, expect this to be shorter. But if the wave 3 isn't going to be the longest and the most impulsive, then we can expect the wave 5 to be making up some of that velocity. And it is possible that we can have a truncated wave 5 following an explosive wave 3, and that just basically means a wave 5 that finishes at a similar height as the wave 3. So again, saying if this is super explosive, then we're not going to expect that replicating action on the wave 5, and actually it might be short-lived and finishing at a very similar level. So that's the kind of the theory and the principles, and we're just going to take a look at a couple examples out there in the wild, so to speak. So one notable example, and this is something I'll be sharing just on my my account at large on Bitcoin, but I wanted to just go back to 2019, October 2019, because it's quite a nice clear-cut example where you'll see on a larger time frame, and this is where the numbering and the notation differs. I've identified this as a wave 1 going into a wave 2 before going up into that 3. And then the only way to kind of quantify and justify that is to be looking on smaller time frames for that kind of confirmation of that 5 waves to the upside, and then subsequently, what's the correction in that wave 2. So if we look in this example alone, and these are the tools that we're referring to for the Fibonacci retracement and extension. So having highlighted this as on a smaller time frames, the wave 1 into the 2, explosive 3, small 4, and then a short 5. And what gives me some confidence to this count, and it's not obviously just because the benefit of hindsight, zooming in, if we were to use the Fibonacci retracement tool and go from, that's extensions, retracement, and I've got all my numbers set up here to the side, we can see that wave 1 comes all the way back past the golden pocket and actually touches the 78.6% retracement, typical for a deep wave 2 pullback. And if we were to get rid of that and then follow up with an extension, I think this wave 3 was, well, you can see how there was a reaction to the 4.618, but then it surpassed it and then pulled back. And then you'd probably see something similar if we were to do a retracement. That's going to be that's an incredibly short retracement, but again, reaction, and you can see it's respecting that 23.6% level that we've got highlighted here. And then I think finally there is some form of reaction, 3 to the 4. Yeah, look at that, a one-to-one reaction there on the 5. So I think that's just a really good example of the relationship of identifying those waves on the higher time frame, i.e. this being a 1, and then I guess if you to even pull back, looking at that higher time frame of the relationship between the larger 1 and the 2. I mean, it's just a deeper example, but nonetheless, the golden pocket received lots of reaction, as you can see here, before pulling away to the upside. So that's just one example, and I find that on the daily and the 3-day time frames, Elliott Wave works really well in identifying some of these things, and then less so on the lower time frames. But I know some people like to really count to down to the hourly, down to the 15 minutes, and I think there is, for reasons we'll see moving forward, some truth behind, linear TA and the shapes that we're highlighting and looking at versus some of these theories and principles. So this is another one, just looking at similar. This must have been Elliot. This is Ethereum now following Bitcoin, but similar in principle. Wave 1 going into a 2, extends to a 3. The 2 doesn't drop below the 1. The 4 doesn't drop below the peak of the 1 here, and then we extend up to a 5. And they observe quite nicely. Yeah, here we've got we've got for the depth of the 2 coming down to that 78.6 level, and then with the extension, in this example, less of a relationship up to the 3, but if we were to do the 3 into the 4, you can see how, because we had such an explosive 3, a bit more of a shallow and truncated 5th, but again totally respected by that kind of golden pocket. So it's not necessarily gospel. You can see in relation to these as well how volume reacts. Volume coming up for the 1, pull back for the 2, essentially coming up for the 3, pull back, and then usually anticipating the larger correction, going into everything before starting again. And this is actually where the new wave 1 kicks off. So you can see the relationship between volume and Elliott wave in this area as well. So like I said, this is the first of a series that we're going to be going through. That's just kicking off motive waves, and there's as you can kind of hinting to right here, there's a whole series and a whole swathe of corrective waves that we're going to be going through, breaking down in principles and examples. So I hope that was useful. Let me know if you do have if you have counts going at the moment, or if there's any principles you want to be checking. I know, for example, even people have slightly different Fibonacci numbers that they like to use on their retracements and their extensions. So let me know what you think. Drop your comments down below, and I look forward to speaking to you all soon. Ciao.